Hey everyone, this is Richard, CEO of altFINS. In this trading video, I will cover the technical analysis of KASPA, K-A-S symbol, which is ranked number 25 by market cap. And in it, I will also explain how to trade the ascending triangle pattern, which in this case, there's an emerging ascending triangle pattern, which is bullish, and also how to identify support and resistance, horizontal support and resistance levels, which is really key to trading in general. You know, it's all about identifying the trend, identifying support and resistance, and then your entry levels. So let's go ahead and find KASPA on our platform under the screener. Okay, here we go. First of all, we can check what the trend are for KASPA. Is strong up across the board, short-term, medium, and long-term. Not very many assets are in the strong up anymore, strong uptrend. In fact, we can check real quick which assets are. If we go to the preset filter strong uptrend, right? Wow, well, there's only maybe 20 assets that are in a strong uptrend. Solana is actually one of them, Tron, KASPA. Okay, so one of the few assets that's in a strong uptrend, which is great. We want to be trading with the trend, and if it's a strong uptrend, even better. Okay, first of all, again, the trend ratings are here. You can also look at the technical analysis from here. But before we do that, I want to do the technical analysis so you can see how I approach TA and how I identify the support and resistance areas. Okay, so let's zoom in a bit. Okay, what do we have here? We have a 200-day moving average, which is this line right here. Okay, we can make it thicker. Let's see. Right, let's make it a bit thicker so we can see better. The 100-day moving average we don't need. Get rid of that. Now we got also RSI here and MACD. Also not relevant that much right now. But so what's happening in this chart? Well, in the technical analysis chart that we have prepared, and we maintain about 65 of these for 65 major altcoins. We identified an ascending triangle here, and we can I can show you where it is. It's basically right here, right? It's a series of higher highs, higher lows, which is also a sign of uptrend. Okay, so I'm connecting the sort of the lows of the downswings, and then on the top, I'm also going to connect some of the highs here, right? Approximately, it's about right here. In fact, I could extend it all the way here. As you can see, even these highs are very close to that. I could move it down a little bit more to connect that as well, but plus or minus, I mean, it's never going to be exact on penny or fraction of a penny. It's a zone. That's why it's called a resistance or support zone. It's not an exact number. Sometimes when you see peaks that have slightly higher or lower peaks, then it's a zone, right? It starts right here, right, and the zone ends here. So between sort of 19.5 to 20 cents in this case is where the resistance zone is. But when I do that, in this case, I'm left with an ascending triangle. Ascending triangle is a series of higher lows and has a horizontal resistance. So it's got a dynamic rising support and a resistance that's horizontal. This is an ascending triangle. It's a bullish emerging pattern at this point because it's before the breakout. Now, a trader can trade that between these support and resistance areas. It's possible to, to try to buy it here near the support and sell it near the resistance. But most traders will wait for the breakout. Ascending triangles typically break out in the sort of bullishly in the direction of existing trend. In this case, it's an uptrend, as we have already discussed. Clearly, this asset is in an uptrend. And what's happening here from investor psychology is that investors or traders take profits around this level. They feel like this is overvalued. Maybe it's overbought here. Here RSI is clearly overbought at 80. Here RSI is touching 70. So when it's overbought, traders take profits and they sell. But the important part is that traders are buying it back at increasingly higher prices or increasingly shallower dips, right? They're eager to buy this asset back on this pullback to 14 cents, and then this pullback to, call it 16 cents. So they're, that is very bullish pattern that they're, that the dips are shallower and shallower. There's sort of a good base forming of ownership and holders. Every time it dips, they're buying it back up, but they're still selling it at around 19.5 to 20 cents. So we've got to wait until all of the selling and supply from sellers is soaked up in this area, in this zone, resistance zone. And when finally the price pushes through it and the buyers push through it, that will indicate that all the sellers have been exhausted or soaked up. There's not much, not many traders are willing to or looking to sell at that level, right? And then the price will fly higher, at least I'd say 20% to 24 cents or higher beyond that, okay? So that's how I identified the ascending triangle. But in terms of horizontal support resistance, I've already demonstrated, that the resistance is clear. I mean, you've got price that basically peaks around the same level every time it swings up. It peaked here, it peaked here. You've got 2 or 3 touch points. That's a resistance. In terms of support levels, so let's make this my resistance going to be red, and then support level, copy paste, and let's make this green. Support level is where it found support or previously was resistance, okay? So I'm connecting right here. Notice the price previously peaked around 15 cents, again 15 cents, then it broke through that. So previously was resistance. Once it's broken through that, it becomes support. But then again, it violated that. It peaked here again, right? And it dipped here. I'd say 15 cents looks like a support level. Or if we go deeper lower here, then there is another support level right here, 13 cents. You see, again, there were a few peaks. Peak, then the price dipped here. Yeah, I kind of overshot it, but again, peaked here, found support. So approximately, I'd say 13 cents is your support, the next support level. 15 cents and then 13 cents. And then again, we're looking, this is gonna be easier. Right here, look at all these dips that for the most part reversed at about 10 cents. So those are your support levels, 15, 13, and 10. And that's typical, they usually happen around the round numbers, So, looking for an exact level like 14.56 cents is meaningless. It typically, you got to round up. I mean, in this case, this asset trades around 18 cents, so we're in two decimos. So I'd say stick with the two decimos. So it's not not 10.6 cents, but really 10 cents, 13 cents, 15 cents, because that's how human mind also works. We look for round numbers or significant numbers to us. 1, 10, 100, 50, right? And that's kind of when typically you'll see the support and resistance around sort of a round numbers. All right. So now that we've done that, let's take a look at what our technical analysis is, and it should match with what I just discussed, right? Okay, so I've got support zone at 15 cents, like I said, 13 cents. The resistance zone, which is also lines up with the resistance of the ascending triangle, right, is at 19.4 cents, right? But it really could be as high as 20 cents. It's really a zone. So I'd say I wouldn't react to the breakout until it breaks about 20 cents, above 20 cents. And if it does, I think it's going to go to 24 cents after that. Where would I place my stop loss? Hypothetically, let's go back to the live chart. Hypothetically, if the breakout happens now in the next approach, then my stop loss would be below the prior swing low, right? And here's my prior swing low. The low on this is 17 cents. So if it breaks above 20, I'm gonna go long, I'll buy it, and my stop loss will be about 17 cents. All right. So again, this is, by the way, support resistance is something that we teach in the education, which you can check out. I believe it's in lesson 2. And also breaking out of or triangles or trading chart patterns is in lesson 8. So I encourage you to use these resources that are now currently freely available to you to educate yourself to get a better and better trader. And also, keep in mind that risk management is critical. And so knowing where to place stop losses, what should be your appropriate trade size relative to your entire portfolio, those two things, and as well as not using leverage, frankly. Those are critical risk management tools and knowledge that you should have as well, because trading is about, to great extent about managing your risk, not getting blown out, staying in the game long enough to realize the profitable, profitable trades and winning statistics that in the long term should make you very profitable. So I hope that this helps you. Again, technical analyses is something you can find on the technical analysis section. You can also find them in the screener. They're a great way to find trading ideas and get started, but also a great way to learn how to do technical analysis. All right, well, I hope this has been helpful. If you have any feedback or suggestions, please email us at invest@altfins.com. And keep in mind that this video was for informational purposes only, not meant to be financial advice, and do your own research. Good luck trading.